should be 18% or lower, because the government feels then the opposition led by the Congress party will not have much reason to actually continue opposing the GST bill.
The report has recommended an R&R range of between 15 to 15.5%. Remember, CNBC TV 18 is the only channel to have gotten it right. We said it's likely to be lower than 18%. The report has also recommended a lower rate of 12%. The standard rate will depend upon the choices made by policymakers on account of exemptions, tax categorization of products, etc. Well, CNBC TV 18 is the only channel to get it right on the GST rate. The Arvind Subramaniam panel has proposed a lower rate, just as we've been reporting over the last few days. Good evening, and thank you for joining us on India Business Hour. I'm Surabhi Upadhyay, and Ronojoy Banerjee joining us from the Delhi studios. Hi, Ron.
Hi, Surabhi. Well, it's been a very news-heavy day, and let's quickly look at some of the headlines that we've been tracking through the day. We told you first, and it's now official. The Chief Economic Advisor-led panel bats for a GST revenue-neutral rate of 15 to 15.5% and a low rate of 12% for essential goods. Seeks a 40% rate for cigarettes, aerated drinks and luxury cars.
The Arvind Subramaniam panel also calls for abolishing the 1% interstate tax and wants the GST rate to be kept out of the Constitution. Also bats for alcohol and fuel to come under the GST ambit.
Weak global cues rock Dalal Street. Nifty tumbles below the 7,800 mark, losing over 1%. Sensex sheds nearly 250 points as no sector gets spared.
Crude prices tumble after the world's top oil-producing nations decide to stick to status quo. The output ceiling has been raised to 31.5 million barrels per day.
US jobs growth remains robust. Unemployment rate in November stands at just 5%. Wall Street rallies even as many expect a rate hike from the Fed sooner rather than later.
Reliance Communications signs a non-binding agreement to sell its tower assets. US-based Tillman Holdings and TPG to undertake due diligence. Sources say the enterprise value is around 22,000 crore rupees, and all the proceeds will be used to pay debt. The stock, however, sees profit-taking.
Delhi government comes up with a unique proposition to fight corruption. Private vehicles with odd and even numbers will be allowed to ply on alternate days from the beginning of next year.
There is no LIC opposition.
Vedanta's Anil Agrawal remains upbeat on winning over minority shareholders and sealed the merger with Cane India. Plays it safe when asked about paying more royalty to the government for the Rajasthan oil fields.
Finally, some respite for Chennai as the rains stop. Met withdraws its heavy rain forecast for the next 48 hours, but food, drinking water, power and other essentials remain scarce. 14 people die in a private hospital due to lack of electricity in the ICU.
And on the hour, Bill Gates and Jensen have shared the stage to discuss ways of improving financial inclusion in India. That's a CNBC TV 18 exclusive. All right, so the top story this evening, just like we have been consistently reporting over the last several days and weeks, the panel led by Chief Economic Advisor Arvind Subramaniam has proposed a revenue-neutral rate below 18%. Here are the top 7 big takeaways from that report. Number 1, the revenue-neutral rate has been pegged between 15% to 15.5%. The standard rate for non-essential goods is between 17 to 18%. Number 3, the low rate for essential goods is at 12%. A demerit rate for cigarettes, alcohol and luxury cars, among others, has been pegged at a high of 40%. Now to some proposals that could help the government seal the deal with the Congress. And that's point number 5. The panel wants to abolish the 1% interstate tax, which was proposed to offset the losses for manufacturing states. Number 6, the panel also does not want the GST rate to be made a part of the Constitution. And number 7, the panel wants to bring fuel and alcohol under the GST ambit. Here's Arvind Subramaniam on his panel's proposals and the Minister of State Finance, Jayant Sinha, reacting to that report.
The key standard rate will very much depend upon, and I want to elaborate on this, the choices that are made on exemptions and what product you tax where, and one critical product which will determine the standard rate, the taxation of which relates to precious metals. And so what we've presented here is a range for the standard rate. Now this standard rate will be the same for goods and services. That rate will depend upon how you tax precious metals, and depending on that, whether the tax on precious metals is 6 or 4 or 2, the standard rate will vary between approximately 17 and 18%.
That's precisely what the GST Council has to do, and that's precisely what is intended for the GST bill, and which is why we have been maintaining that the constitutional amendment has a very important role to play at a constitutional level, which is to be able to set up the structure that enables us to be able to design these different structures and then assess dynamically and iteratively over time which products and services go where. That is really what the work of the GST Council and that is what has to be reflected in the GST bill. I have said all along that the first act in this play, if you will, is to actually get the constitutional amendment passed. Right. That in itself is quite complicated legislatively. Thereafter, working through the rate structure, working through which products and services go where, is also legislatively quite complicated, because we have to go through a consultation exercise, we have to formulate the GST bill, and then have that discussed, debated in Parliament, and then passed.
My last question, sir, is it practical to put a rate within the Constitution? Because experts tell us that no rates have till now been put in the Constitution.
I think there's a very good reason why there are no rates in the Constitution, and around the world that is in fact the practice, because the Constitution is a framework document. It's a principles document. It does not go into day-to-day policy making. There is a role for a framework and a constitutional architecture, and that's reflected in the Constitution. And then there's a role for a bill in Parliament that deals with the day-to-day aspects of policy making and rate setting. And that is the architecture that has evolved in our Constitution.
The rate has been now submitted. So obviously the Department of Revenue and Finance Ministry will go through the report, and the report also will be put into consultation with the state governments, because they are equal stakeholders in the whole GST implementation. So through mutual consultation between the state governments and the Government of India Finance Ministry, through the mechanism of the empowered committee of the finance ministers of the states, some decisions will be taken to take it forward.
Well, now that the report is in, how will politics play out? Earlier this day, our managing editor Shireen Bhan caught up with Balchandra Mungelkar of the Congress, who was a member of the GST Select Committee. Congress, remember, is still sort of pushing for some of the key demands that it had earlier made. And another member she caught up with was Rajiv Chandrasekhar. There was also a tax expert on that panel, E&Y Satyapoda. She started off by asking Mungelkar of the Congress party on what he makes of the CES panel report. Listen in to that conversation.
I'm not at all happy for one simple reason. First of all, let us understand very clearly that Congress is the author of this GST bill. It was Congress initiative, it is Congress innovation. Second, now I don't understand the argument of Mr. Jayant Sinha and Mr. Arvind Subramaniam for a very simple reason. If they don't want one specific rate in the constitutional amendment bill, say for example 18%, then where is the question of this fluctuating range of between 17 and 18%? Ultimately 17 and 18% rather than one specific rate of 18%, you will be having one recommendation is between 17 and 18%. That means you are giving range. But range also giving the lower and upper limit ultimately in terms of numbers. Third, Now, what we are doing is, the basic idea is converting entire Indian Union, entire nation into one common market. And once you are giving the range, and if suppose tomorrow the range is fluctuating for different states, then earlier we are having the whole GST concept and innovation is to avoid the multiplicity of tax structure. Now, Mr. Arvind Subramaniam's report is suggesting multiplicity of the same standard rate. My only point is that everybody wants its own footprint. Congress will not take any adamant stand. We shall negotiate into this. But just to annihilate, just to kill, just to have its own way, rather than 18%, 17%, so that they don't want
but if I can interrupt you, sir, if I can interrupt you and put to you the argument that has been made by the Chief Economic Advisor on the reasons for the conditional rate structure, because he says that it will depend on the exemptions that the centre will try and do away with, which are currently pegged at 300 versus 90 at the state level, as well as the taxation for certain commodities like precious metals, and hence the conditional rate structure. He's also in his report gone on to say that India should strive towards a one rate structure, but at this point in time the committee has recommended 2 rates.
No, what happens is, once you are suggesting one specific rate, and their main worry is that we shall be requiring to amend the constitution time and again, I don't think this kind of fear and apprehension we can bring so far the GST rate is concerned. You know, after constitution was adopted on 26 January 1950, within 6 months the first amendment came so far the land reforms were concerned. That's why
so you're continuing. So you're saying, sir, that the Congress Party's position on inclusion of the rate into the constitution is non-negotiable. But what about the rate itself, the revenue neutral rate of between 15 to 15.5% and the standard rate? Your quick comment on that before I get the other panelists, and then I'll come back to you.
No, I think Congress Party will be taking the entire holistic view and take a considerate view on the recommendations of the committee once we meet together.
All right, Rajiv Chandrasekhar, a quick word from you on what you've heard from the Arvind Subramaniam panel. A range as far as the GST revenue neutral rate is concerned between 15 to 15.5%, a low rate at 12%, and a standard rate of 17 to 18%. There are some concerns though, Rajiv, and I wanted to get your comments in on the demerit rate, which is as high as 40%.
Yeah, Shreen, I think the CEA's report, coming as it does now, addresses a lot of the concerns that were raised during the consultations that the Select Committee held, which is, one is the cascading effect of the 1% tax, the distortion that it brings in. There was obviously a lot of concern about what this effective rate would be, effective tax would be, which the Congress has raised in its dissent note. And of course, there was this whole issue of dispute resolution. Now, and the fourth one was this thing about leaving alcohol and fuel out of the ambit of GST completely in the Act. So I think the CEA in a sense has addressed all of them. But the problem here, Shireen, is that this remains one more report, because there has been a myriad of reports on the GST. The Act is in front of the Parliament today is an Act that has come through a process of state consultation. And if we have to tinker with the Act now, we are essentially looking at going back to the states with whatever re-architecting that we want to do. I personally happen to think the 1% going away is a good idea. I think the revenue neutral rate of about 18% is a good idea. I think the fact that if we can come to an agreement on the dispute resolution mechanism, and the fact and a commitment that fuel and alcohol will be brought into GST at some point with the GST Council, these are all good things. Now, for the Congress's position on 18% is inarguable. I think they are completely correct in saying that the number should not be high. But where I differ from them is that you don't need to have that in the Constitution. We can effectively get a government commitment on the floor of the House that says that this shall be the effective rate, and that should be enough if the Congress is legitimately concerned about the rate going up and down in the future.
Yeah, you're absolutely right, but I don't see the Congress at this point in time yielding ground on that demand. Several Congress ministers, former ministers, including the former Finance Minister Chidambaram, on my show has very categorically stated that that is not an issue they're willing to negotiate on. He said it's not a bazaar, that they can negotiate on that point. But let me bring in Satya Poddar, and let's talk about this from a tax perspective, Mr. Poddar. On the back of what you've heard from the CA's panel today, in terms of the rate structure, and, you know, while the headline will scream a revenue neutral rate as far as 15 to 15.5% is concerned, the standard rate is 17 to 18%. A lot of that will depend, as the CA says, on the rationalization of exemptions.
Well, first of all, I must say that the CA report is extremely bold and balanced. It's almost like a Supreme Court verdict on very controversial and politically charged discussions and debates that have taken place. And the CA panel has been extremely bold in giving an honest and objective opinion about number of flaws of the Constitution bill. And it's not appropriate to just focus on the R&R rate. The CA is explicitly saying that R&R rate depends upon the scope of the GST and what exemptions are provided. Today we are living in an exemption raj. And as a result, we have a system with very high tax rates and very low revenue being generated because of the exemptions we have. So CA is recommending explicitly that the low tax rate of gold and precious metals be re-examined.
Right.
Even the exemption for health and education should be re-examined. There should be no exclusion for alcohol, real property, electricity, and petroleum. So you can't talk about the single issue of R&R rates. And if you have a broad base, then in fact the rate can be much lower than 15.5. 15.5 is estimated on the basis that the base will not be broadened enough. And your point about should the rate be legislated in the Constitution and left outside, if the rate was substantially below 18%, then I could see the logic of not enshrining the rate in the Constitution itself. But in the structure that that was taken as given, the rate is barely below 18%. And even now, you can get to 18% only if you tax some goods at a very high tax rate of 40%.
That's right.
So I really have no hope that the government will stick to the 80% ceiling if you don't put it in the Constitution.
So you would like them to put it into the Constitution? You would like them to put it into the Constitution, Mr. Poddar?
Either they should remove all the exemptions and exclusions from the Constitution bill, including alcohol, petroleum, and other items, electricity, or they should go ahead with the 18% as an absolute tax rate, because otherwise I really have no faith. If the governments were benevolent and they were marching on a path of truly transformational tax reform for the country, then of course we don't need the ceiling of 18%. But as it is, our discussions are completely derailed on the GST design. What was meant to be an ideal GST that will give a boost of 2 percentage points to GDP is turning out to be an absolute disaster. And
you're saying it's turning out to be
explicitly saying.
Yes, he's explicitly saying many things, include what you've left out into the ambit of the GST, including things like electricity, petrol, alcohol, etc. He is, of course, making those recommendations. But Mr. Mungerkar, before I get to you about what we could change as far as the current architecture is concerned, is this really going to fly in this session of Parliament, you think?
No, see what happens is, first of all, Congress made it stand clear that Congress, definitely being the author of the bill, we shall be as far as possible to the maximum extent accommodative. But on certain issues, as it was just now mentioned, when the questions about, there are a number of issues, as Chandrasekhar was mentioning, the GST dispute settlement mechanism, we want separate independent authority and not the powers to be given to the GST Council. For example, we want permanent GST compensation fund. We want 5-year continuous and complete compensation to the paid to the states to neutralize their revenue loss and all other things. Now, so far 18%, why 18% should be, as now just now mentioned. See, basically when we are not abiding by the constitutional obligations, How to believe in any government tomorrow for that matter? Maybe it is the Congress or BJP or any government for that matter. The fear is because of the exigencies, because of the drought condition, because of the loss of the revenue, because of the fiscal profligacy, tomorrow it will be quite possible and easy to go to relatively higher rate than 18%. And that is why removing all exemptions, etc., bringing tobacco, electricity, you make 18% standard rate without beating around the bush. I think that is legitimate suggestion, but that also taking into account all other provisions of the report, Congress will take a proper stand.
All right. Rajiv Chandrasekhar, a quick word from you. What does your gut tell you today? You know, the finance minister has several times said that a compromised GST is worse than taking forward the GST altogether. At this point in time, what we're hearing from tax experts is that this is a compromised GST. Be that as it may, do you see hope for it in this session?
No, and look, I think I've said this on your show many times, and I've said this before. This is a compromised GST. I've never said that this is the perfect GST. Your expert on the panel has pointed out exactly the issues that make it imperfect. And really the choice is, do we start in this manner, or keep pushing and kicking the ball ahead, looking for this, utopian perfect GST. And that's a call that the political leadership of both these parties have to take. I would argue that we must get started and evolve this as we go along, because I have seen too many things in Delhi get kicked down the road and never happen. I think GST is something that we have a tryst with it, and we must move down the road with expeditious, minimum delay. I would still like to see GST April 2016 have a GST, even if it is imperfect.
Okay, Satya Poddar, in a minute, what would be the red flags that you would be watching out for? You said the recommendations made by Arvind Subramaniam are bold, but these are recommendations. Let's be clear about that. What would be the red flags? And do you really believe that April 1, 2016 is a dead timeline?
April 2016 is not an achievable timeline, regardless of when the constitutional bill is approved in this session or the next session. And my own feeling is that, as Mr. Sinha mentioned in his comments, Constitution is a principles document. And on the basis of the principles, let's have the principle of the broadest possible base. Even if you choose not to have a perfect GST, let that choice be made in the GST law, not in the Constitution.
Okay. All right, so that was all about the GST. Now on to the Lal Street, where the bulls have faced severe pressure today. Weak global cues spooked sentiment as markets saw some sharp cuts in trade. The Nifty tumbled below the 7,800 mark, losing just over 1%. And of course, yesterday also that index lost 1%. The Sensex lost 250 points today, as no sector got spared in what was a secular decline. Mid-caps also lost ground in tandem with blue chips. That index lost nearly 100 points. Anuj Singhal is here with the wrap of the day's trading action. Not a great day, Anuj.
Yeah, I mean, the market is weak. I mean, it's clear that the market was inherently weak. This market was underperforming even on days when global markets were doing good. And now that the global markets have turned corner, clearly our markets have that added problem, and now they're declining at a fast rate. It's not a sector-specific problem. Yes, you could say that banks are doing the worst, so the Bank Nifty has dragged the most. But even otherwise, non-banking heavyweights have also contributed. And even for the mid-caps, the second half is not turning out well, as was the case today as well. Let's talk about the stocks then that led the market decline. HDFC was down 2%, ITC down 2% as well, and Tata Motors was down about 1.3%. That's the non-banking pack that led the market lower. Look at some of the private sector banks, and that's where the bigger problem is. HDFC Bank down 2%, ICICI Bank as well nearly 2%, and Kotak Mahindra Bank was down about 1.5%. There were some other losers as well in trade today, including stocks like Reliance, which was down 1%, Z Entertainment was down 3%, and NTPC was down about close to 2%. On the gaining side, we had some stray winners like Sun Pharma, which had an approval, and that stock was up about close to 4%. Ken was up 2%, and Bharti Airtel was up about 0.5%. Outside the index, stocks of the day, Well, clearly the two big ones were GMR and Reliance Communications, both seeing profit booking after the news. Reliance Infra in particular was quite weak, GMR Infra rather, down 15%. Reliance Communication was down about 3%, and Orient Paper was probably your stock of the week, up 20% today, up nearly 50% for the week. Some other mid-cap stocks which looked interesting today included Educom, up 5%, Amtech Auto was down 4%, and Just Dial was down about 5%. Well, the levels have come and gone. The next important one would be somewhere around 77.30, the previous low, because if that's breached, then there's a genuine risk of this market going back and testing the 52-week low of 75.40.
Thanks for that, Anuj. Let's go over to some other important international news. The world's top oil producers were in a huddle in Vienna today, and they have decided against any cut in the output. Now, poorer members, remember, of the OPEC nations like Venezuela, Algeria, Ecuador, were asking for a cut in production as prices hover around the 40-year lows. But the largest oil producer, Saudi Arabia, will have none of it. In fact, the daily output ceiling has been hiked. CNBC's Steve Sedgwick is here with the details.
Guys, look, at the moment we're still citing sources, but this is quite extraordinary. For the 15 years I've been coming down to Vienna, the big accusation against OPEC is, well, it doesn't matter what your production level is because you produce above it anyway. You produce 1 million, 2 million barrels a day above it. Well, now it looks like they're finally just about admitting what the actual level is. I'm just looking over my shoulder in case some of these ministers start coming out now, but it appears, according to sources still, that they've said, yeah, we're producing 31.5 million barrels a day, and then we've now made that our official level. It does not mean, and I mean to really say this and emphasize it to all the traders out there, it does not mean there is an extra barrel of oil going on the table. This is the group admitting that 30 million barrels a day is a fallacy, it's a fantasy, it's absolute joke. We are actually producing at least 31.5 million barrels a day, and that is what our official level is now. There is another issue here as well, because OPEC is going from 12 members to 13 members, and that includes Indonesia, which incidentally is a net importer, but we'll leave that aside for another day. So with the Indonesian barrels as well, that takes them up another 1 million barrels, give or take the change, up to 32.5. And there are some who are saying that actually OPEC is producing way over 31.5. So it is really quite punchy. It is really laying down the gauntlet to all those who say you should be cutting, and that includes members within OPEC, the Venezuelans, who were saying to me this morning the current policy doesn't show the real influence of OPEC and is a catastrophe. That was the words of the Venezuelan minister. It's a catastrophe. What we want is 1.5 million barrels off the table. He said 5% off the table at a minimum is what we want. And actually now they've admitted that they're producing not only 30 million barrels a day, but 31.5 million barrels a day, and possibly more. And I think it really is the gauntlet being laid down. Because let's face it, what other choice they have? They're not going to get anyone else going with them if they go for cuts. If Saudi cuts, its GCC allies will go with them, but no one else will. And all the chatter around here has been about the Russians and how the Russians time and time again have said, you can cut, but we're not going with you. We'll be very glad to have that market share if you do. Back to you guys.
So then how are crude prices faring following that OPEC decision? Prices are sliding after the decision, of course. NYMEX is hovering around the $40 mark, and Brent is around the $43 mark. Survey, the job growth in the US looks somewhat robust now.
Well, absolutely. The economy certainly seems to be on the mend. The unemployment rate in November is at 5%, and this could also mean that the Fed hikes could just be around the corner. In fact, Steve Leesman is here with the numbers. Steve.
I want to share two numbers with you which I think are interesting, which is the workforce in the household survey. Who knows if this a trend makes? Up 313 in October, up 273 in November. We've been drawing people in and finding jobs for them, which is why the unemployment rate has stayed more or less steady.
Right.
So the employed up 320 in the household survey, and up 244. That had lagged behind. Right. This number is incredibly volatile. It's very hard to make an investment decision, let alone policy on it. But I just pointed out because it's the only measure we have of people coming into the workforce, and it's an idea that kind of backs up what Yellen's been talking about. Very quickly. Interesting to find good hiring numbers again in retail. There was some sense that in the October numbers. We pulled retail hiring forward. We didn't do it. Up 41,000 in October, up 31 in November. So that's a sign that retailers think there's some good business coming their way. I did some work last year, found that their hiring is a good sign of what the net sales growth will be. They're pretty good, and better than anybody else at predicting what it's going to be. We had that strength in construction. Why? Because we've had strength in housing and residential building. That's been a positive for the economy. And as Hampton said, the minus 11,000 in mining. It's what we expected, but watch the U.S. economy, which we keep saying is very dynamic. It overcomes that challenge. It hurts in Texas, it hurts in the oil belt, but it's not killing the rest of the market.
All right, Steve, thank you for that. Now, Wall Street clearly seems to be cheering that jobs report. In fact, it's seeing a major rally as we speak. All the benchmark indices have been trading over 1% higher. Look at that rally, pick up momentum and steam. The Dow Jones now 1.5% higher as the market seems to be taking this rather well. The economy is on mend and perhaps getting down to accepting the idea that the Fed will hike in December. All right. Meanwhile, European markets clearly didn't have much to cheer about today. So what started off with marginal losses ended with deeper cuts. However, the markets came off their lows thanks to the way the U.S. market opened up and decided to react a little more optimistically to that jobs report.